Good to see everyone. Good afternoon. I'm Derek Levington, and a warm welcome to all of you joining our webinar today. And this one is entitled The Business of Power, Cost, Competitiveness, and Funding the Clean Energy Transition. I will introduce our panelists shortly, but Amar, I'm going to ask you to offer a land acknowledgement as we begin.
Sure, thanks, Derek. So SAS Power's work reaches the ancestral lands of many nations. This includes those nations on Treaties 2, 4, 5, 6, 8, and 10 territories, as well as the Lakota, Dakota, and Métis nations. We respect and honor Indigenous knowledge and the ancestral lands of Indigenous peoples and are committed to moving forward in the spirit of reconciliation and collaboration. On a more personal level, when I used to think of Indigenous culture, I had a really limited view. But a little while ago, a friend of mine had introduced me to the album A Tribe Called Red. As a regular listener of hip hop and electronic music, I'd never heard a sound like on this album before. It was just cool to hear how the group blended the genres with drumming and singing in a different way. I came away with a new way to experience Indigenous culture and that I would have otherwise not experienced had my friend not had that album playing in his car.
Great, thanks, Amar. So a bit of background. SAS Power is in the process of updating its long-term power supply plan. And of course, that plan must deliver cost-effective, reliable service that meets greenhouse gas emissions targets. But how do we get there? And that's really what the future supply plan engagement process is about. It's a 5-stage process, as you see up on the diagram, and SAS Power is looking for input at each stage. So during the second stage of the engagement process, and that completed earlier this year, what we heard was that participants really wanted to learn more and understand more on things like, information like the cost of power, the whole sort of life cycle environmental trade-offs, things like that. And so we're happy to report in that second stage that over 15,000 people completed the survey that was online during stage 2. So we're really happy with that. If you want to read more about what we're hearing in this process, you can do that at saspower.com/engage. And of course, again, some of what we're hearing about what people are interested in, that's informing the topics that we're talking about. And one of those is the same one that we're talking about today. So we brought together 3 panelists who I will introduce shortly. And again, we'll be talking in this episode about the business of power, talking about cost, competitiveness, and then again, this whole sort of piece around funding. We're going to have a couple points in here where we're going to pull in questions from the panelists. I'll be pulling in questions and offering them to the panelists as we go through the conversation. And then whatever time we have at the end, we'll be happy to answer as many questions as we can. So in terms of navigating this here, there's 2 things there. There's, of course, the chat button. We're going to be using that primarily for support. If for some reason you can't hear those kind of things, we'll do our best to support you that way. The Q&A button, I'll prompt you for those when we kind of get to points in the presentation where we can answer some questions. I'll prompt you for those, and we'll be watching for those. And like I said, I'll kind of be looking and offering those questions to our panelists, kind of in our discussion format here. In case you're curious, the whole sort of recording is going to be posted a little bit later on saspower.com. So if for some reason you have to step away or you want to share this with someone else afterwards, then you'll be able to do that. So anyways, let's meet our panelists who you can see on screen here. I'll start with Amar, who you met. Amar has worked for SAS Power since 2009 in roles on both the engineering and finance side of the business. He's currently a financial analyst and spends most of his time analyzing the financial impacts of different generation options as SAS Power works to transition away from coal generation by 2030. Amar is a graduate of the Electronic Systems Engineering program from the U of R, where he also completed his Master's of Business Administration. Next, Derek Bjornson. You have 2 Dereks today. So this is Derek Bjornson. He is the Director of Financial Analysis and Treasury at SAS Power. Derek has worked in the electrical industry since 1998 and is a chartered financial analyst. For the last 5 years, Derek was leading SAS Power's treasury, credit, pension, insurance, and financial analysis teams, with special attention being focused on the cost of generation options as SAS Power progresses through the energy transition away from conventional coal by 2030. Previously, Derek had been responsible for SAS Power's work with independent power producers and led the negotiations of power purchase agreements with private companies and neighboring Canadian provinces. And Andy has been with SAS Power for over 20 years and is currently a key account manager. She began her career with the company as a scheduler on the energy trading floor before spending numerous years as an energy trader, transacting in both real-time and long-term power trading markets. Andy also spent time working as an electricity trading analyst as well as a natural gas purchaser. In her role with key accounts, Andy aims to provide a high level of service to the province's largest commercial and industrial customers. So great to have all of you here today. Again, these are folks that work in the business, and so great to have them. Okay, we want to add a little bit of interactivity to this, and so this will be our first interactive exercise here. A little bit of power trivia. Again, we're trying to sort of share information, and so I'll read the question out. And the current residential energy charge is $159 per megawatt, and that includes $10 per megawatt for the carbon. What was the cost per megawatt in 1950? And I'm just going to launch this here. So this is your chance to put in your answer there. I'll just wait a minute, get a few answers in there, then we'll share the answer. I'll wait a few more seconds. Okay, here we go. 3, 2, 1, and I'll close it off here and see how we did. Okay, our audience, looks like the leading answer is $5 per megawatt. Correct answer is actually $30 per megawatt. Let's see how this works out in terms of inflation. So yeah, $30 per megawatt. So I guess our inflation equivalent there is $383 per megawatt in 2023. So power was actually comparatively more expensive at that time than it is now. Okay, thanks for that. Well, we're rolling with trivia here. In 1951, SAS Power sold 242,500,000 kilowatt hours. Now it sells this much every 4 days. So I guess if it looks like if they're measuring in kilowatt hours, probably the decimal places were adding up. So I guess that'd be 242,500 megawatt hours or 242.5 gigawatt hours. I'll look to Derek and Amar. Am I getting my math right when I'm moving decimals around?
Okay. Absolutely.
There we go. Okay, let's get in. Derek Bjornson, I'll ask you to speak to this. We got a chart up here. Just give us a snapshot of SAS Power today from that financial perspective.
We can certainly do that. So for the past fiscal year, we incurred a loss of $172 million. That's compared to a net income of $11 million the year prior. This was largely due to increases in expenses. SAS Power had maintained its rates at the same level since 2018, and inflationary pressures, including higher fuel costs, forced SAS Power into a loss situation. So a loss is unusual. The last loss was 1986. This year, SAS Power expects to return to a profit, but unfortunately, a rate increase was required to address those inflationary challenges. Return on equity was negative last year. The last 5 years, it's been around 5%. Earnings are either retained to fund future growth or returned to the province through a dividend. So we have about $3 billion of revenue and $8.8 billion of debt. Note the energy transition will result in a large investment in new capital, so this $8 billion of debt will increase significantly. Also of note, a rate increase of 1% on $3 billion represents $30 million of revenue. That's a good reference point for some of our later discussions today.
Okay, thanks. Andy, you work with customers in that customer-facing role. Just walk us through SAS Power's customers as they're shown up on the diagram here.
Yes, absolutely. So, welcome everybody. I am one of 8 account managers here at SAS Power. So, our team manages the province's largest commercial and industrial customers, or as we call them, our key account customers. So, we aim to provide a higher level of service given the significant contribution they make to the province's bottom line. So, just to give you a bit of an idea of what that contribution is, the key account customers account for approximately 60% of Saskatchewan's electricity, yet they're only about 7% of our total customer count. So that shows you how much they make up there. These large customers, they use a huge amount of power from our system. So an example of a key account customer would be a potash mine or a processing facility where electricity is a major input to their process. Then we have another segment here called the small and medium business customer segment that falls under another team, but also a super important segment. They account for 20% of our total customer account. count, sorry, and the remaining 20%, of course, are residential customers, which we are all residential customers. So over 400,000 farm and residential accounts consume about 14% of our total electricity consumption.
Okay, thanks, Andy. Amar, tell us what we see on the chart here. How do we compare in Saskatchewan here in terms of rates?
Sure, Derek. So our latest data is from 2022, and here's what it's showing. So including taxes, Regina has the fourth highest electricity rates in Canada as of April 1st, 2022. This is prior to the two most recent rate increases, which came in September of 2022 and April of 2023, respectively, and of the carbon tax increase, which occurred in January of this year. So the overall trend you'll notice is the more hydro a province has, the lower their power rates tend to be.
Okay. So Andy, for SAS Power's largest customers, how do power rate changes and rate increases impact their bottom line?
Well, we know that for a lot of our key account customers, SAS Power is their largest operating expense. So in some cases, we make up 80% of our commercial customers' operating costs. So when you're looking at a $2 million power bill each month, any kind of rate increase will have a significant impact to your bottom line. We also make up a sizable portion of our customers' emissions expenses as well through carbon tax. And because of this, our customers expect SAS Power to move towards net zero emissions as quickly as possible.
Okay. And Andy, can Saskatchewan continue to bring in new business, when we have other jurisdictions that are already cheaper because they're running on primarily renewable power?
Yeah, we understand that the higher electricity prices in Saskatchewan compared to these other jurisdictions can have substantial impacts to the provincial economy. So we're super mindful that if the profitability of Saskatchewan's potash, uranium mining, and other oil industries, for example, are significantly impacted by power costs, it may cause industry to pause investments or reconsider investment altogether in Saskatchewan. But one of the key advantages that our province has are the resources and feedstock that already exist in this wonderful province. And this is what really helps draw industry and investment. Our team is seeing many sectors that are taking advantage of the vastly changing market conditions over the past couple of years. Some of the contributing factors have been from the provincial governments focused on the post COVID economy.
Okay.
But part of our role here in the key account team is to work closely with ministries and CIC to ensure that we're doing what we can to make it easy for these new entrants to do business in Saskatchewan.
Okay, thanks. Derek Bjornson, where do you expect to see power rates go, across Canada in the next 10 to 20 years then?
Well, can't say for sure where power rates are going to go province by province. I'd say that's probably beyond my scope of knowledge. But what I'm comfortable in saying is the province that have the bigger lift on moving towards net zero, the Albertas and the Saskatchewans, they're going to see greater increases than the provinces that can rely on, say, legacy hydro assets. So what we're going to see is the range that in rates that we currently see will probably grow over time.
Okay. Amar, back to that residential cost. So, SAS Power continues to hear from customers that affordability is really important. That should be a top priority for the company. How can SAS Power help reduce these increasing rates and the pressure on residential rates for customers?
Sure, Derek. So we care a lot about what's important to our customers, and our customers care a lot about the cost of their power. We also know that there are impacts to the broader province when power rates go up. Saskatchewan consumers will have lower disposable income available, which can lead to reduced demand in commercial goods and services in Saskatchewan, which may result in job and income loss. We avoid increasing rates as much as we possibly can. We don't take rate increases lightly, Derek. When we can't avoid it, we understand we must show our homework to the rate review panel as to why a rate increase is necessary.
Okay. Andy, what about on the, for the larger customers? What's that look like?
Yeah, so we know that for the residential customers, they certainly feel the rate increases, but so do our larger ones. So as previously mentioned, these large commercial and industrial customers have massive bills to begin with. So I just think about how they feel when we request even a 1% rate increase when they already have a $2 million bill each month. We know that they really feel the impacts with these, which is why, as Amar previously mentioned, we never take these rate increases lightly. But our customers are also feeling the pressure in their environmental, social, and governance, or ESG. You might have heard it being called targets. And so ESG targets are no longer a nice to have initiative like they might have used to have been, but it's a must have for these big businesses to remain competitive in Saskatchewan. It impacts their ability to get business from their customers, even to retain financing and earn capital from their investors. So this is why we've developed some renewable solutions options for our large customers. And I know our customer solutions group is also looking at shared renewable options for our residential customers as well.
Okay, and just a note for people that are listening, there's going to be a session on October 12th where we're going to have a group back talking about some of the shared renewable offerings that are being developed for residential customers. So again, go ahead and sign up. I'll outline what's coming up, but that's one that's coming up on that side there as well. So. Okay, thanks for all that. I want to go to one other question here in terms of just a quick trivia question. And I'll just read it out here. So SAS Power has a subsidiary called North Point Energy Solutions that buys and sells electricity in markets in Canada and the US. In 2020 to 2023, was SAS Power a net importer or net exporter of electricity? So I'll just wait a moment for those responses to roll in here. Okay, a couple more seconds and then I'll close it off here. Okay, 3, 2, 1, and there we go. I'll share the results back here. Okay, so it looks like the consensus is net importer, and that is correct. That is correct. Net importer. And between those two numbers, that represents 7% of SAS Power's electricity supply last year. So, okay, let's go to. We're gonna get into again in the October 4th Power Talk a little bit more deeper on some of the energy trading side of things. But I'd like to look at just some of the sort of energy importing and export. Maybe Derek, can you tell us, just for today's purposes at sort of a high level, is this buying and selling like a real-time stock market, or is it all kind of long-term contracts?
Okay, well, it's not precisely like a stock market because you can't store or hold electricity like you can hold a stock. Stocks may be purchased and held maybe forever. Electricity needs to be consumed at the same time that it is produced. The electricity markets are constantly balancing supply and demand through price signals. The map here is a good illustration. Saskatchewan is connected to 3 markets. Alberta to our west is an hourly energy market. Their prices range on an hourly basis from close to zero over to approaching $1,000 per megawatt hour. In the US, we have very limited connections, but the market is similar to Alberta, where the new price is set every hour. In the US, prices can actually go negative for electricity. And Manitoba is the market most closely related to Saskatchewan, where Manitoba Hydro holds the monopoly. And there are long-term contracts at fixed prices, but these agreements are made by companies outside of the formal market structure.
Okay. So what are some potential business opportunities then for SAS Power? Like, we have these plentiful sort of, renewable resources here. What are the opportunities for exporting solar and wind power?
We totally recognize the excitement around becoming a powerhouse of wind and solar and exporting the energy for profit. And we need to approach exporting as a solution for SAS Power with just a bit of caution. In order to benefit from selling, say, wind, we need a buyer. And that buyer needs to be willing to pay more than our cost. So prices in Alberta are sometimes high, but generally not when there's lots of wind. And the wind profile in Saskatchewan is very similar to that of in Alberta. So when wind is high, when solar is high, the energy prices begin to decline. And in some markets, these prices can actually go negative. So there's a risk with exporting wind and solar energy. So say you need to commit to delivering energy to Alberta, in this case, 2 hours in advance is the minimum, sometimes day ahead. The wind is not blowing in Saskatchewan. We still have to honor that sales contract. That means we need to secure energy from the Alberta market. So if the wind isn't blowing in Alberta, then the price could actually be higher than our selling price, and we could result in a loss. So basing a business model on exporting wind and solar for profit does have some risk. There may be opportunities to generate some revenue when that energy is abundant, but we should think of that as an incremental opportunity as we green our grid.
I want to go back to that sort of instance about energy going into the negative. Mark, can I ask you to speak to this and just explain that a little bit further?
For sure, Derek. So this graph is the shape of the energy demand curve in jurisdictions which have a lot of solar. Demand drops during the day and then typically spikes when the sun sets, making the general shape of a duck. So this is what's referred to as the duct curve. What the duct curve means is at some point, the value of solar energy will trend towards zero unless it's paired with battery or another form of storage. So the excess energy can be stored and then used to serve the peak when it's needed. The future will be about the value of dependability. The energy delivered at 6 p.m. on December 20th when it's dark and cold. Energy will become worth less, and capacity, having the ability to meet demand when it occurs, will be much more valuable.
Okay. We've got time for a couple of questions here. I'll start with one here. If we're saying that the price of energy really kind of fluctuates during the day, is SAS Power looking at going to time of day billing or something like that, just so we can maybe that has the effect of reducing the peaks, but just also reflect some of that higher cost of providing service.
Sure, I can grab that. Some jurisdictions, even Ontario, offer time of day billing, and SAS Power, we're considering such a structure. Before we can roll out net billing, we need to set up the automated meters. They need to be installed, and that could take a bit. We've got hundreds of thousands of meters to replace at this point. But while that replacement is being completed, we can observe how the programs have worked in other areas in Ontario. We can benefit from those lessons learned. So it is something we're considering.
Okay. Would this transition have cost less if we had started sooner? Obviously, we're talking about a lot that has to change in a short period of time. So would this be cheaper if we'd started on this sooner?
Or I can take that one too. One of the challenges we've had is we've been challenged by constantly changing regulations. The advancement of the net zero target from 2035 to 2050 will definitely increase costs because there's so much demand being forced into a short time period. This heightened demand will likely be inflationary as well. The electricity industry will be chasing as much labor, resources, equipment that we can to meet the timelines. This could crowd out other investment in the province and could likely result in higher costs in a scenario where we had more time. Starting sooner may have resulted in an overbuild. We'd have things in advance of need. So underutilized assets mean higher costs. Also, the non-emitting technology needed, such as SMRs or carbon capture, are not yet commercially available. But good point. One place where we could have realized some savings is we may have been able to avoid some of the significant inflation and higher interest rates that we're now experiencing. So there's some good and some bad with that question. And I understand there's some challenges.
Okay. Seeing some questions just around what say a residential customer would pay versus an industrial customer. Andy, you mentioned they're using more power, but how do you make sure that everyone's sort of paying their fair share of these things? Can you just talk about just how you come up with the pricing for each of these different types of customers?
I'm going to have to toss that one over to Amar or Derek. Sorry.
Okay.
Yeah, Derek, could you repeat the question there again?
Yeah, I think what people are wondering about is that we have residential customers and we have sort of larger commercial and industrial customers. How do you make sure that everyone's sort of paying their fair share? Because we need a lot of investments here. So can you just talk about how things are priced by different types of customers?
Yeah, so kind of the way we look at we're a cost of service model. So as we look at or across our different customer segments and look at their power needs, energy consumption, so on and so forth, we obviously know that there's projects and costs associated with delivering that electricity to them. So, we have a rate group, and their sole focus is on determining, spreading out those costs in a fair and equitable manner, based on who consumes what and where. Derek, is there anything further you want to add to that, or?
It's a good summary. It's well done.
Okay. we'll have a bit more time for questions a little bit later on here. So I'll go to some of the next ones here, but we'll go back for some more questions. And again, we have some more information here as well, so we want to play through on that, and then you can ask your questions in response. So, okay, just another bit of trivia, just in terms of what we're talking about, in terms of what the value of all the SAS Power assets are. So, so here's a question here: what's the total value of our assets that make up the system? And I guess your possible responses are 4, 13, or 18 billion. Give you a minute to fill those in. Okay, another couple seconds. Go 3, 2, 1. Yeah, it looks like 13 billion. Looks like that's the most popular answer there. So yeah, 13 billion in assets. And for context, in terms of investments, SAS Power expects to invest up to 40 billion by 2035. So again, a lot of investment being made in the grid in the coming years. Okay, next, let's get into some of the cost things in more detail here. So, Derek, I'll ask you, can you explain again this concept of, I know this is kind of an industry term, levelized cost of electricity. What does that mean?
So levelized cost is basically the average all-in cost of a generation option. One of the downfalls, unfortunately, is LCOE is a bit of a distraction if you're trying to understand the system cost of electricity. In one sense, it doesn't take into account the reliability of the option or the need for backup power, storage, or reserve margins. Take something like wind as an example. Say its LCOE is $50 per megawatt hour. What this doesn't tell you is in order to operate a reliable system, additional capital needs to be invested in dispatchable capacity, such as natural gas or batteries to back up that wind. The entire cost of the system is our focus. A system comprised entirely of wind may be low cost, but also very unreliable. Reliability needs to be a key consideration. So levelized cost, the average all-in cost of generation, is useful for comparing similar projects, but not useful in comparing across technologies with different capabilities.
Okay, thanks. Amar, can you just, here's some specifics on some of the details in the breakdown of LCOE. Amar, can you just walk us through some of the specifics that we see on the graph here?
Sure thing, Derek. There. So wind and solar are the lowest cost, but we also need to consider the impacts on system reliability, as Derek had mentioned earlier. The current data suggests that natural gas-fired generation is the most economic option, which can be built at scale. This is likely the reason the federal government chose to add restrictions to limit the use of gas, because the economic decision would be to rely on natural gas and pay the carbon tax. Natural gas pairs well with renewables like wind and solar. This reduces the exposure to fuel risk and carbon tax as well. Unfortunately, the limitations proposed for run hours by the federal government makes creating a reliable system using a combination of wind, solar, and natural gas more challenging. Considering the limitations on unabated natural gas, the most cost-effective option is likely natural gas paired with carbon capture and sequestration technology, CCS, or nuclear. That said, though, at some point, batteries and wind are going to enter the equation and play a larger role, but we need more experience with batteries, Derek, and likely lower battery cost so that we can be more confident in that path. There are some other options available as well. Geothermal power is reliable and produces no greenhouse gas emissions, but they require a water reservoir which has temperatures above 100 degrees, 120 degrees Celsius, to proceed with a geothermal power plant. Studies show the possibilities of these reservoirs do exist in southeast Saskatchewan, and we are working with a developer on a potential project. Another option is biomass as well, which is under consideration. The biggest impact on price with biomass, though, is the cost of the fuel source. The cost can vary widely between standing trees, waste wood, and straw.
Okay. I want to go to nuclear because I know there's been a lot of talk or concern about the capital cost of nuclear power. And I'll direct this question to Derek. How does nuclear compare specifically to some of these other baseload forms of power in the short term and the long term? From a financial perspective.
Okay, so the capital cost of an SMR, a small modular reactor, is estimated at $9 million per megawatt by the federal government. There are 2 nuclear projects under construction in the US. Those are in the range of 15 to 20 million per megawatt. This means is nuclear is at least 3 times the cost of a natural gas-fired plant. Bright side, though, is SMRs will have a 60-year life, which is much longer than a natural gas project. Ontario Power Generation, or OPG, is also building 4 SMRs, and their first will be built by the time we make our construction decision. So we'll have more data on the cost of an SMR when we make that decision in 2029. So the challenge with capital-intensive projects is they're significantly impacted by inflation and higher borrowing costs, both of which have increased since we started looking at nuclear as an option. The high capital cost doesn't mean stop. It just means we need to carefully assess the risks that come with these capital-intensive projects and weigh the risk against the benefits that will realize in the long term.
Okay. So a question for Amar. We know that the cost of generations are increasing. I think that's understood. We also know that SAS Power is replacing, parts of this rural distribution as well. So again, just to set aside that whole sort of piece around the generating side for a minute, what can we expect to see in terms of the cost of transmission and distribution in the future as well? And I guess as a follow-on to that, like what impact will that have on the cost of power as well?
Sure. So today, SAS Power, we've spent approximately about $8 billion on transmission and distribution assets over the last 90 plus years. With a significant portion of these assets approaching their end of life, paired with what will be needed to support further capacity additions, we expect to spend this amount of money again to support the grid. As it's alluded to in the slide and Derek mentioned earlier, for every $1 billion that SAS Power spends, we would require about a 2% increase in rates to cover the debt servicing costs. We would then need about another 1% to cover other associated costs, things such as taxes, payments to landowners, maintenance costs, things of that nature. Some pressures which are pushing some of these transmission distribution costs even higher include the infrastructure reinforcements we're going to need to support EV charging and transition to electric heating. We expect these costs to be greater in urban areas versus rural areas of the province. With all that said, though, for rural parts of the province, especially those with few customers and low energy requirements, we are looking at some other solutions. One of those ones are the deployment of microgrids, and these typically would be like a renewable asset, such as solar, paired with a battery and a backup fuel source. And we're looking to do this kind of where that solution is appropriate. As we gain more experience with working with microgrids and how they work, we figure that this will help alleviate kind of some of the cost pressures like associated with supporting a grid like ours, which is large in terms of like how vast it goes, but that has lower customer density to support those costs.
Okay. Let's go back to this chart here. Amar, what is SAS Power's opinion on the cost to reach net zero, 2035, and the resulting impact to rates?
Sure. So as mentioned earlier, we estimate that the total cost that we're going to have to spend to be net zero by 2035 could be up to $40 billion. So to kind of put this in a little bit more context, on average, the revenue we get per megawatt hour is about $120, of which 2/3 of that is associated with generating costs, which works out to about $80 a megawatt hour. New non-emitting generation is going to cost more. As an example, adding a carbon capture to a natural gas-fired facility doubles the capital and operating costs while reducing the output by about 10 to 20%. The cost of a new natural gas plant is about $100 a megawatt hour before taking carbon tax into consideration. So the simple math would suggest that the cost with carbon capture will be more than double since the capital and operating costs will have doubled and we're getting less output from the plant. So that pushes the cost of a natural gas with CCS in that $200 per megawatt hour range. As Derek had mentioned earlier, SMRs are expected to have a long life, but they come in at a relatively high capital cost up front. We're working closely with OPG to estimate the cost of an SMR, but we don't have a figure we're ready to speak to publicly at this time. We can look to other markets though for comparisons. Projects in the US have come in with a cost around just over $200 a megawatt hour, which would make it comparable to natural gas with carbon capture, as I mentioned earlier. Wind and solar are lower costs, but granted, that's on an energy basis. However, as we've said earlier, those resources aren't dispatchable due to their intermittent nature. So as a result, we'll have to build either an SMR or put CCS on a natural gas plant, or pair with batteries, even if we have plentiful amounts of wind and solar installed. So this means a higher use of capital and also our higher capital costs, and a less efficient use of capital, which translates into higher costs.
Okay, thanks. Derek, how is this different than what the federal government has projected, in their commentary on those draft clean electricity regulations that were published, earlier this year in August?
Well, the federal government anticipates the new regulations will have minimal impact. We suspect that the regulations will result in a material rate increase for our customers. So prior to the new regulation, SAS Power expected to meet the province's needs with natural gas and wind. The resulting rate increases were expected to be similar to inflation. On a cumulative basis, that's the total between now and 2035, rates will increase 30 to 40% due to normal inflationary pressures. On top of the inflationary pressures, projects required to meet net zero will likely result in another 60%, meaning rates will approximately double. Most of this impact is post-2030, and that's when the non-emitting sources begin to come online, especially those base load sources. Now, keep in mind, this is a preliminary estimate. We're continuing to review the regulations, and things may change, but this is our initial assessment.
Okay. So traditionally, SAS Power has funded, projects through customer rates. Why might this need to change? And is there funding available through the federal government to make this transition? I'm not sure if Derek or Amar wants to speak to that.
Sure, Derek, I can speak to that point there. So there is funding available, and partnering with the federal government will help us manage the cost of the energy transition. As we've mentioned a couple of times here now, for every $1 billion of funding that allows SAS Power to avoid borrowing $1 billion, that reduces that debt servicing cost that we have to pass on through our rates. So just to kind of bring it back, the mortgage payment on $1 billion is about $60 million a year. So every $1 billion of funding that we can secure should reduce rates by about 2%, holding all else equal. There is still a cost though. 10% of the federal revenue goes towards interest costs on debt. So the burden is effectively transferred from electricity customers in Saskatchewan to the taxpayers of Canada. But we make a small part of Canada, so that's good, right? We're about 3% of the nation. So to keep pace, SAS Power is going to need to attract a lot of federal funding, at least 3% of that pool available. SAS Power has committed to ensuring that we secure Saskatchewan's share of the funding, and we've already secured some funds for work on SMRs and various renewable projects that we're looking at as well.
Okay. Okay. Well, for those of you that have been patiently waiting, we'll start taking some questions. I have a couple that I'll ask here while we're waiting for a few more to come in. So, maybe a question. Maybe Derek, you can speak to this. What has surprised you the most when you look at other jurisdictions, that are further along than Saskatchewan is, with their energy transition? Like anything that we think we can learn from them.
Surprise. I think one thing that surprised me, maybe if I can go to another province, is Ontario in the past little while has announced 8,000 megawatts of natural gas-fired generation. And 8,000 is a big number. Our system's around 5,000. So a significant amount of natural gas. And that's in a system in Ontario where they have a lot of nuclear. And they're already like 80 or 90% on their way to net zero. So I think one of the things it illustrates is just how important natural gas is going to be to the transition. And it was really kind of surprising to see Ontario step forward and say, hey, we're still going forward with significant adds because we need it to balance the system. And I think that's something that we can learn and maybe focus on our comments back to the federal government. Is the transition is going to take time. Renewables are important, but natural gas, especially in a climate like ours, is going to be important to smooth the valleys and peaks that we see on solar and wind and help maintain a reliable system until those SMRs and carbon capture facilities are available.
Okay, thank you. Can you talk a bit about how the carbon tax works? We have a lot of money that needs to be invested. Like, what happens with that money when it comes in on a bill? Does SAS Power get to keep that, or what happens with those carbon charges once you collect them?
Or do you want it, or do you want me to jump on it?
I can start, Derek, and then you can kind of fill in the gaps where needed. Actually, do you want to start off?
Sure. So that the carbon tax levy that you'll see on your bill is about $10 per megawatt hour. And that money right now is collected, and there's a crossover point. At one point, it goes all to the federal government. At a certain year, which escapes me right now, it goes over to the provincial government. So the revenue is collected and submitted to either government, depending on the timing. Now, the money that we've submitted to the federal government, we're working with them right now to identify projects that we can use to reinvest these funds into green technologies or energy efficiency or greening the grid, projects that will help advance our movement towards net zero. So we received 24 million for SMRs. We received, I think it was a bit over $100 million related to a variety of green projects. So we're looking to not have it just as a tax into general revenue. It goes into kind of a fund, and then we can access that fund to help support the greening of the system, and that should help reduce the impact on our customers.
Okay. Just another question here. So you mentioned a bit earlier that natural gas right now is still currently making economic sense. I don't know how long you can reasonably expect that to last for, because obviously there's fossil fuels are not sort of the future. But how is SAS Power managing the sort of possibility of stranded assets with you're still building these plants, but they may not last as long as some of these other ones have?
Yeah.
What are you doing about that?
I can touch on that. That's a big one. It affects the levelized cost very significantly. So the risk of stranded assets is significantly impacting our financial analysis of everything, new projects. The cost increases dramatically when an asset can only be run for 10 years instead of 25 or 30. So SAS Power will seek the lowest cost alternative that may be achieved under the expected regulatory framework. This may mean that some facilities may not get built. Unfortunately, the timeline's so aggressive that some non-emitting technologies aren't commercially available right now. So SMRs would be an example. So due to the short schedule, some assets need to be built that we know are going to be stranded and then later replaced with a non-emitting technology, such as those SMRs. This higher cost is a byproduct of the accelerated timelines imposed by the federal government. So it's something that we consider. It's also something that we can't necessarily always avoid due to the rules set by the government.
Okay, can you talk a bit about we've talked a lot about today on the generation side. Can you talk a little bit more about what role do you see batteries playing in all this? Obviously, it allows us to kind of capture some of our renewable energy and use it later. Just if you want to talk a bit about what do you think the economics of battery storage look like, maybe in a bit more detail.
I'm going to give Derek a break here, and I'll take that one.
Sure.
He's been helping us out a lot. So at SAS Power, we recognize the benefits that batteries bring to the system. We currently do have a battery project under construction on the east side of Regina, and another larger project that's in the early development stages. So with respect to the initial project, once it's implemented, we see these batteries to help balance the variable generation with demand, maximize collection of renewable energy and for use when it's needed, and possibly avoid some additional peaking gas generation. We got to remember though that a battery only buys us time when it's full. So from what we're seeing in most utility scale batteries typically have a 4-hour duration where they can help serve load. Um, so we have, in our experience, we have observed periods longer than 4 hours where wind and solar generation are not available. Um, Also, when batteries charge and discharge, they do lose some of their capacity over time, kind of much like your iPhone, right? So when you get your brand new iPhone battery, you go in the battery health monitor, it shows has 100% of its original life. But as that phone gets older, I think like on mine right now, I'm at about 84%, and I've had it for about, 3, 4 years. Um, so, there's that effect on the utility scale batteries as well. And then another thing we have to keep in mind with the utility scale batteries is they do have a shorter asset life. Data we're seeing kind of shows about 10 years, give or take. And what that means is there's going to require more frequent refurbishing so that we can keep those assets performing as we need them to.
Okay. A question on maybe sort of a big picture, sort of strategic perspective. How is SAS Power managing risks just around disruptions to your business? Obviously, SAS Power has a monopoly, but as you go forward, I think probably there's an increased likelihood of disruption to the business model. So, are there microgrid providers that can kind of plug and play and take some of SAS Power's customers? Are you expecting to be competing with companies like Tesla, that might sell you, a set of a solar roof and a battery that you can go and maybe we have customers sort of leaving the grid. Can you just talk about, what you might be, how you might respond to risks like that in the future and how you're thinking about it internally?
I can start on that one. Well, the electrification of the economy is going to result in a large increase in demand, and I suspect with this rapid expansion in demand, we're going to see more customers looking to self-generate. This may be to green their consumption more quickly. It could be ESG. It could be to save costs. And there are cases where they'll have a regulatory advantage or maybe access to subsidies. So we'll work to compete, but sometimes the regulatory environment and subsidies will make it a challenge. Microgrid, there doesn't appear to be immediate risk, but we always need to be aware of new developments. What was the last one? Tesla?
Yeah, just the idea of someone just going off the grid, that they can buy kind of not necessarily off the shelf products, but I can put on a solar roof, I can put in a battery, and I can kind of become a little sort of self-sustaining little ecosystem. Maybe I still need a little bit of power here and there, but maybe I can just unplug.
There you go. Okay, so as I would say, as the technology evolves, there may be more and more desire to focus on a solar battery combination. And this is actually something we're looking at too. One of the challenges we're trying to work through is what to do in winter when solar production is very low and the battery can only serve you for, in some cases, a short period of time. Amar was mentioning 4 hours. So I think as we move forward to it, I think we have to be open to it and look at it ourselves, maybe able to do that on a utility scale and maybe provide some of those same benefits. I think there are going to be more of that. It does highlight the challenge of what do you do in the dark of winter? Mm-hmm. And that is something that where the capacity is going to become very valuable. And it's something we need to work through. But I think as technology evolves, the day may come.
Okay. Derek, this question's for you because I know that you've been involved in sort of negotiating power agreements and such like that. Can you talk about why SAS Power is using sort of independent power producers for solar projects, versus maybe, building plants like you would, a coal-fired plant or a natural gas plant?
Yeah, there's a few reasons. One of the things, maybe going a decade back or even more, a conscious decision was made to reach out to the independent market and work with them to bring projects to us. And what we found, especially on renewable projects, but maybe not so much on the gas side, was on renewable projects, there was a lot of competition. There was a lot of experienced developers out there. And they were able to get access to capital at quite low rates. So they were actually delivering projects that were very attractive. So we're able to partner with industry and deliver these projects cost effectively. I don't think it works as well on certain types of projects, but definitely on renewables. I think it's been very successful. It allows us to work with a variety of counterparties that can find opportunities that maybe we hadn't looked at. I think that's been a very successful partnership. We also have some natural gas partnerships. Some of them are with cogens, so we may not have access to the site, say Upgrader in Lloydminster. Well, we can't just choose to build there, but we partner with them and we're able to put in a gas facility. They can get some heat and steam out of it. We get some electricity. So I think it's a way to meet the needs of the province, partner, and it delivers benefits for both sides.
Okay. Next question is, how do you factor in carbon pricing when you're looking at LCOE? And again, I guess there's probably a certain level of uncertainty on those because, the projections you're talking about, I mean, these are spanning out decades, but, public policy can change. So can you just maybe talk about how you're factoring in, again, carbon pricing into LCOE in your modeling?
Derek, you want me to? Yeah, I'll start on that. So, as we look at different options and again, just we, there's the methodology and the levelized cost equation to figure out all the different cost components, right? So, when you're looking at a carbon emitting option, let's say like natural gas or coal, for example, once we understand, on a per unit basis, megawatt or gigawatt hour, how much carbon is emitted, again, based off of, what we know is available in terms of the federal carbon pricing schedule, we can then take those numbers and then again, looking at how long this system was online, how much energy it's going to deliver, what's going to be the associated emissions and ultimately tax exposure associated with that type of project. So, it kind of, in a pre-carbon tax world, you're looking at, you're breaking down all the different cost components of delivering a project. And so this is just now another component that we have to consider. Derek, do you have anything further to add to that, or?
Yeah, the only thing I'd add is there's a great deal of uncertainty on the level. So it's at $170 per ton right now, but we haven't received guidance on what it will be post 2030. So there is a risk factor there, and we have to look at scenarios. That's why you see kind of wide ranges in some of our options. Is there's a lot of variability on where regulations could go.
Okay, thanks.
Thanks, Derek.
Next question. What's the status of depreciation on SAS Power's generation assets? I mean, we sort of had some of that number up there to begin with. So, some of the plants like, say, coal or hydro that have been around for a while. How are you sort of managing depreciation on those? Have they been depreciated to zero, or how are you sort of handling that?
Depreciation, we'll set the depreciation of an asset to the life of that asset. So if it's hydro, it could be very long. If it is something like a coal facility, we've accelerated the depreciation to be fully depreciated by 2030. That was the original date of the regulations when coal had to be retired. A natural gas plant, we're looking to go over the economic life. So the new regulations proposed by the federal government actually will probably require us to review that, because the life or the ability to use that asset fully beyond 2035 may be impaired. That's uncertain at this time. That's something we need to understand the regulations better and review. Something like our transmission and whatnot are just depreciated over, say, 30 or 40 years, depending on the factor. So I think we noted that our overall assets were $13 billion. We've got $11 billion of net book value of, say, generation, distribution, and transmission assets. So there is still a significant amount that is to be depreciated. There's also a significant amount of life left in those assets.
Okay, thanks. What do we know so far just about the end of life costs for SMRs? Anything that kind of going into this? I know that SMRs are a new technology, but maybe there's other experiences on other types of reactors.
Yeah, there is some experience in the nuclear industry, not on SMRs specifically because they haven't been built. Mm-hmm. what we do is we look at the other projects that have been decommissioned, and we also receive input from the manufacturer, say it's a GE or a Hitachi or whatnot, and then look at the experience. We're working closely with OPG to get an understanding of what kind of costs we need to set aside. And when we're planning out an SMR, we actually plan to put a certain dollar amount away for every megawatt hour produced. It goes into a fund, and that fund is maintained to decommission that plant at some point, 60, 90 years in the future, if you were to life extend it. The costs, I think if you look at OPG, their costs are, I don't know offhand, but they are material. But they have put money aside and continue to put money aside. So they're generally expected to be fully funded by the time that day comes. But I couldn't tell you the exact cost at this point, something we're researching.
Okay. Okay, it's almost 1 o'clock, and I've got a couple more slides to cover here, and we want to make sure that we get everyone on their way before the end of the lunch break here. Andy, I'm going to give you the last word because we've heard a lot from Derek and Amar, but I guess for obviously a lot of information here. Some of it's technical, some of it's detailed. So I think if maybe folks are overwhelmed, I don't think that's they may not be alone there. Can you kind of distill some of this down for us from your perspective? I mean, again, you work with customers, but just how would you sort of summarize a lot of this?
Yeah, so thank goodness we've had Derek and Amar to answer these financial questions today, but it is a lot of information. But the bottom line really is that it's a big time, a big change for SAS Power and for Saskatchewan, and it's also a big change for all of our customers, both big and small. So we've never been through this type of transition before, and we know that there's going to be some big decisions that need to be made. But there's also going to be lots of opportunity to create a made in Saskatchewan type of approach as we look towards our future together. And this is why we're having these conversations now with our customers. It's important for us to continue to exchange information and be super transparent with our customers. And we also have to remember, I remind myself this often, that it took us nearly 95 years to build the grid that we have today. It's a long period of time. And 10 years ago, we set 50% emission reduction target by 2030. And we're well on our way to achieving that goal. I have no doubt that we'll be able to move towards that net zero emissions target in the safest, most reliable, cost effective way possible, but it's just going to take some time.
Okay. Well, thanks everyone. Just before we let you go here, this is the first, and there's 3 more that are coming up here. So the next one is next week: Power and the Environment, Impacts, Trade-offs, and Making Sound Choices. All of these are taking place over the lunch hour. That seems like that's a time that works best for most people. So that's next Tuesday, September 26th. And if you're interested on the renewable side, we're going to have a team from the Environment Group sitting in a format much like this. Following that, Connecting Power Grids. That's all about the imports, exports, and interties. That's Wednesday, October 4th. And then October 12th is that Customer Renewables program here. So I just want to say, again, thanks to everyone who attended today. Before we let you go, there's we just want to just remind you, there's always ongoing opportunities to sort of stay up to date on what's going on at saspower.com/engage. When we're active in our sort of various stages, you'll see surveys up there, polls. You can ask questions, and actually probably some of the people that you've met today will be behind the responses to some of those questions. But yeah, and you can also subscribe to the newsletter there as well. Before you go though, one thing I want to ask you to do, and this is an important part of this, is just to help us just kind of see how we're doing here. So I'll just put this up there. So I guess the questions we want to ask are, did you learn something new today? So is there some new information that we shared? Tell us how we did in terms of kind of your overall satisfaction, kind of a simple 1 to 5 rating there. And then I guess maybe most importantly, would you come back to another one of these? Would you attend another one? So yes, no, or maybe. So anyway, with that, it's 1 o'clock. Thank you so much to everyone who joined. Thanks for our panelists, Derek, Amar, and Andy. It was great to have you, and we hope to see you at the next one. So I'll give you a minute to wrap up the assessment at the end there, and then we'll let you get on your way. But thanks, everyone. Hope you have a good rest of your day.